Hi everyone, and welcome to another page in the Diary of a Trader. And today's video I'll be talking about how to trade forex binary options, which is the alternative to forex CFD trading that you may know. So what shall we do in today's video? Well, let's go through a brief introduction of what options are so you will understand the differences. So in options, you make a bet on whether the market would be above or below the current price. So if the market is at the moment here, you are just making a bet on whether it's going to be somewhere, anywhere above or anywhere below. It doesn't matter if it's a 1 point, 1 pip, 1 micro pip, under or above. That will determine whether you are going to win or lose. And if that happens after a set amount of time, and that will be your expiry time. So just so you're clear, in forex, what we call forex, that's the market we're trading. So here we have the euro dollar, and binary options is just the style of trading where it is either only a win or a lose. That's why it's called binary. Only one of these two scenarios will happen. And in options, there's no need to worry about pips or volume sizing or miscalculating the risk. There's also less terminology because when you are place your risk, you place the amount you want to risk. So let's say $100, and you know that if you are wrong, that is the absolute maximum that you're going to lose. Whereas in CFD trading, contract for difference, you will be calculating lot sizes, and you will need to know the pip value, and you will need to know the total amount of pips, and therefore calculate your total risk based on that. So it's a bit of a simpler, easier method to trade. And you have the payout percentage, which will be given to you when you open your platform. And the payout percentage is simply a profit as a percentage of what you've risked. So if you've risked 100 and the payout percentage is 80%, then you will be making $80 on that trade. So you've risked 100 and you've made 80. But at the same time, you also know that this is the maximum risk. So in Forex, the time can be unlimited, and in options, it is limited. And you're also limited by the amount that you've risked and the amount that you win in options. And in Forex, there is no real limit. However, there is also a higher potential as the market may continue to move in your favor, and therefore you're making more. So that's a summary of the differences, just as an introduction. And now let's just move on to the next part and become familiar with how to trade. So again, just as with CFD trading, there are different platforms for Forex options. And it is the same concept, similar concepts as Forex. To guide you, you've got similar indicators, you've got the candlesticks, you've got strategies to guide you, different concepts of trends and zones. However, you will need to have option-specific strategies, so make sure you get the strategy that is based on options, not based on CFD trading. Then you will choose your time frame and stick to it and pay attention to the same period of time between the trades. So if you choose, for example, a 5-minute expiry time, you make sure that you place a trade every 5 minutes when the time begins and not in between. So for example, you would not place a trade which is at 10:02 in between these two times. That will skew your consistency, and also if you are using candlesticks, like in this case, you will not be able to have an accurate analysis. So stick to the same time period. If it was 2-minute expiry, then of course it will be 10, then 10:02, then 10:04 as the starting points. Okay, so let's look at an options platform and see how it works. So you can have a look at it in practice. An options platform, we've got the time period right here. So after 1 minute, we've got a 1 minute expiry. We've got the total amount that we want to risk that we can choose. And here is the actual strike price, meaning the price that we are referencing, which the market will refer to when you have the ending price. And then we've got the percentage payout. So you can see here it's 84% on euro dollar, on Aussie dollar is 87%. So we've chosen our time frame, which is a 1 minute, and then we've got some EMAs here if we want to use them. And so what we're going to do here is we're going to say that in the next 1 minute, we can also reduce the time frame, 30 seconds, 15 seconds. So in the next 1 minute, we're going to place a trade. And then we are going to wait for that expiry time. And when the trade expires, then we will get our result. So let's say as a rough example, we've got our strategy, and the strategy says that we've got a cross of the EMAs and we have a zone here. The market is continuing to break lower. So let's say, for example, that in the 1 minute chart, we are going to place a sell when the next 1 minute candle expires and the start of the next one. So we're going to wait for that to happen. So once we see that time expire and the next minute begin, that's when we will place our bet to go lower. So we're going to wait for that to happen. So we're going to have an example here, and just to show you how it works, as a very brief example, let's say that in this case, we've decided that we're going to make a bet on the market going lower. So we've chosen our time frame, in this case 1 minute, on a 1 minute chart. So we're going to wait for the candle to finish, and then we're going to place our sell. We've placed it as a $100 bet. And now, as a new candle forms, we're going to place that in. So now we've placed it. We were going to wait for the 1 minute to finish, and if we have any price above, we are going to lose that 100, or any price below, we're going to win 83, which is 83%, and that is the payout on this platform. So you will see the market moving live, and as you can see, we'll have the time to expiration, and the market will move, and the time that the price is set at the end of that expiration, that will determine a win or a loss. So at the moment, we've bet on lower and the market is heading higher. So it seems like we're going to lose unless the market turns. So we'll wait for the expiration. So you can see the market was a tiny bit lower, but it doesn't matter how much lower it is. We have won, and the profit in the account has gone up. So that's a brief example. So thank you very much for watching. And a final tip, just stick to the same markets that you're trading, the 5 or 7 or perhaps 10 markets that you are looking at, and the same time frames as well, as you'll become more consistent by getting used to the time frame and this time frame that the strategy is based around. Thank you, and see you on the next trading diary and the next page of this Diary of a Trader. Good luck in your trading.